Okay, good morning. I'm Deb Wagner, a Grant Specialist Advanced from the Division of Energy, Housing, Community Resources, or DECR, as we are known. Assisting me today is Charlie Androsky, another Grant Specialist Advanced. As in past webinars, if you have a question, please type the question in the chat box and we will attempt to answer it. If we have moved on to another subject, we will answer your question during the next question and answer period or at the end of the webinar. If we miss answering a question or the answer wasn't clear, you can always call me. Today we will be discussing 4 different areas: the updates of the RLF ED compliance report, how to follow up on delinquent, defaulted, or bankrupt loans, proper documentation of administrative expenses, and environmental review. Remember, if there is something we don't discuss, you can always ask a question at the end of the webinar. The report and supporting documents should be submitted to the email address on the PowerPoint by November 15th. If the report is done, but you don't have all the job performance information, submit the report anyway by the 15th. You can submit the job performance information when you receive it. You must submit everything as of 9/30/16, the compliance report, any bank statement, money market, investment statement. If you don't have a separate account for the RLF and it's commingled with other funds, then you need to submit your general ledger or your balance sheet with your cash on hand indicated. You need to submit whatever document that you use that will let you know what the outstanding balance of each RLF ED loan is. And we'll talk about that one a little bit later. All of the documentation of the administrative expenses, and you must submit the employee self-certification forms for the people who were hired during this period. If you submitted the form once, you don't have to keep on submitting the form. Okay, as always, I'm going to take off my screen the PowerPoint, but you can continue to follow. And I'm going to go into a sample of the Excel. I'm on the General Information tab right now. Remember to update all changes in personnel on this tab. This is the information I use to contact you. Next tab we're going to is the RLF tab. There were several changes made on this tab. One of the first things that will be is all the loans, and I'm scrolling a little bit here. Okay, I need to close that down. I'm having a little problem here. There I go. There it is. All loans that are brand new that you started in the last 6 months, for some people, they have been putting it into column K, and therefore none of their reconciliations balance. New loans are to be put into column L. To ensure that this isn't happening anymore, you no longer can add information to column K, which is the principal loan balance at the beginning of the period. In some cases, some people, some communities adjust the outstanding principal of a defaulted, delinquent, or bankrupt loan by the unpaid interest or penalties. You can enter this amount in this new column here, increase due to accrued interest. This column will then automatically add the penalty, the unpaid interest into your outstanding loan balance. We also added 2 more columns, and I basically added these is because we're having problems with the reconciliation for the financial amount. I kept on telling you to send in the documents that gives you the total of your outstanding loans, and people are having problems understanding what I mean, and I apologize for that. But this is a hard thing to understand if you're not an accountant. Outstanding loans is what you use to know what the borrower has to pay you back at any point of time. So this could be your balance sheet by grand total. It could be your, and on your balance sheet it would be your accounts receivable total. It could be your amortization, original amortization sheet, and you would have it indicated when everything is paid on there by hand. A lot of our communities are doing that. It could be a detailed trial ledger that indicates all the activities for the 6-month period with the beginning balance and the ending balance of your outstanding loan. But whatever you use, it could be your T account too, by the way, but whatever you use to tell you what a person or borrower has to pay back is that document I am looking for. And you are to put into column R here, right here, that amount that's from that document. And your difference should then be 0. And if it's not, we have to research, you would have to research why there is a difference, why this report isn't agreeing to your document. And I have found some I just found one yesterday that the interest and the principal were interchanged on this report. And some of that's that simple, some of it isn't that simple. If you have an accounts receivable total, grand total, and it comes out, in this case it would be $71,522, you don't have to find a document that would list every single loan. You could just type that 71,529.50 in here, and oops, of course you would have to type it right, not like I do, but if you type it right, it could go in there. You don't have to list them individually if you have a grand total. Otherwise, please list them individually, 27,430.47. And the documents that I'm talking about that you would take that dollar value from and put into this column is the documents you would send into this office. And then the other thing on this report, on this sheet, remember to change your status every period if it's appropriate. And your status definitions, I'm hoping I have, no I don't because I deleted, I hid some columns, are down lower on the page. Now, any questions? We'll give you a few seconds to send in any questions you may have in this area. Either send it under the question or the chat box. Okay. We're not getting any in. So either it's taking you some time to type. Here it is. Charlie?
Is column R total of principal and interest?
No, column R is just the principal. And that also will now be including any interest due to the accrued interest to penalties or unpaid interest. That now goes into the outstanding loan balance. So that would be in that column. You're welcome, Cindy. Okay. We're going on to the next slide. And it's, since reporting on the follow-up of delinquent, defaulted, and bankrupt loans is now required, it makes sense to have standard guidelines when a loan is considered delinquent, defaulted, or bankrupt. I went to findlaw.com to get the definitions, and this is what we will be using to determine the status of the loan. A delinquent loan is 30 to 60 days past due with no payment being made. A defaulted loan is 61 or more days past due with no payments being made. Bankruptcy, I deviated a little bit for bankruptcy, and it's going to be when the process for bankruptcy is started. And there's basically 3 chapters that correspond to the bankruptcy our borrowers take, is a Chapter 7, a Chapter 13, and a Chapter 12. If you want any more information about those 3 bankruptcies, the different types, and what's all the requirements, or if you want to leave it to your attorney, that would be fine. But if you want to know anything more, you can go to the website that's indicated on the PowerPoint. Now that we got the definitions, we can proceed to the new tabs that were added. Loan Collection 1. This tab, you have a Loan Collection 1 and a Loan Collection 2. Everybody has that tab. You will use these tabs if any loan is identified as delinquent, defaulted, or bankrupt during the 6-month period that you just had. I also added collection tabs for every delinquent, defaulted, or bankrupt loan that was identified on the March 31st RLF compliance report. So in this case, our RLF sheet indicates a K, which is, I believe it's defaulted. No, it's a bankrupt. So I go to the, and it was, the borrower was A. So I go and I put in the business name. You put in the beginning and the ending date of the loan and the original loan amount and the outstanding balance. And you get the outstanding balance by going to your RLF sheet, and it's your outstanding loan balance. That's the amount you would be typing in. Or if you know formulas a little bit, what you just saw me do was a plus, go to it, click on the cell, and hit enter. For the first time you put it in, you put in the dollar value. Once it comes back to me, I'll put the formula in, so it'll update every single time. You need to put in the last date of payment, the status, which is delinquent, defaulted, or bankrupt, and the type of bankruptcy, 7, 12, or 13. Yes, Charlie?
There are multiple reasons a loan might be in default, not just payment matters. Defaults are defined in loan documents. We would follow the provisions of default in our loan documents rather than these definitions, correct?
Default here is we're doing collection default, because this is what we want to know, is if you're following up on the collection. So if something else is in default because they didn't do the job performance, if it changes the outstanding balance, then yes, you would put the dollar value in. But mainly these sheets are follow up on delinquent, defaulted, and bankrupt loans that we're not getting the money in. Okay, Christian? Okay, then the next box that's on here is indicate the guarantee and collateral that is in the contract and the position the UGLUG has on it. Well, I didn't indicate the position the UGLUG has on it in my sample here, but this contract has a personal guarantee against the borrower and a lien on the equipment, which the equipment is what the RLF loan bought. And in this case, which I should really be typing in here, is the bank has first lien and we first position and we have second position. So it would be bank, oops, and when I don't go far enough, bank first position, we have second position. And that's just telling us what our chances of getting the funds back. Okay, action taken this period. The bankrupt, in this case, it was bankrupt in June of 2004, and we received $2,500 in bankruptcy procedures. Remaining loan is dismissed. And the future action is no payment can be obtained. Will bring to board to write off books. The other thing you could be saying is, action was taken during the 6-month period, such as contacted borrower by phone on 7/1/16 and by certified letter on 8/1/16 to request payment. When no payment was received on September 1st, turn account over to the city attorney for follow-up. The future action box, you could indicate something like this. City attorney will follow up with a legal letter, and if no funds are received within 60 days, this will go to small claims court. Please note the amount of details that are in these in this boxes. Now, this is your first group of boxes here. On the actual sheet, you'll have a second group of boxes and a third group of boxes. And you would be filling in these boxes each period. You would be, if you would be writing it for the 9/30 report, this would be 9/30/2016, and then this would be the 3/31/2017. If this is bankrupt or defaulted in the first 6 months, then your next 6 months, you would be also saying what action you've taken, and the action you took in this in the 3/31 6-month period should kind of reflect the action that was taken in the future action you put down. So you would be doing this one for 3/31, and your last box you would be doing for 9/30/17. I'm sorry. Now, don't worry. If hopefully within this 180 days, you would have this all taken care of. But if you don't, we always can add some new boxes here. It's very easy to insert and copy. Now, once a loan is closed, you would be indicating the date the loan was completely paid off or the date the loan was written off, the date of the board approval to write off the loan, and the amount written off, or the date you turned it back to us at the state. And I'll talk about that in a little bit. You will not delete. Once you put a person on a loan collection sheet, you will not delete it. That is a history. Once a loan is paid off or written off, we'll move that to the end of your file, but it will no longer, this tab will no longer be deleted. Any questions on this form? I don't watch Jeopardy. I'm not good at it, so but I like the music. Okay, we have no questions, but if you do get a question, send it in. We'll answer it. Your next slide, which is slide 11. Remember, promissory notes, agreements, and contracts are legally binding documents. That is why you should have the guarantee and collateral clearly defined in these documents. This will give you the legal right to collect bad debt. Each default, bankrupt, or delinquent loan is unique, and that is why the following common collection steps may or may not be appropriate. You should ensure all signed documentation, in other words, your contracts, your agreements, your promissory notes, the letters, certified letters you have sent, any notes on phone conversations that you've had with them are all in place and have been reviewed. You contact your borrower and you send a certified letter to them. First of all, obviously, during the first 30 to 60 days, you're contacting them by phone. But once a loan is in delinquent or defaulted, you would contact the borrower by sending a certified letter to them. If that doesn't work, you could have your attorney send a certified letter. Make sure you enforce the contract agreement promissory note non-payment clauses. Some of us are afraid of being a bad guy, but if you have those clauses, you should be enforcing them. And you should file suit against the borrower and enforce the court's decision. Especially when there's a bankruptcy. If they file bankruptcy, you immediately turn it over to your attorney so they can figure out and follow up all the court proceedings for you, because if you don't stake your claim by a certain date, you lose out. You can turn your loan over to the DOA, who will then turn it over to the Department of Justice. I'm sorry, we just lost our lights in here. They're back on. To turn a loan over to the DOA, it would be appropriate if it's good loans to be turned over would be large dollar amounts or people that moved out of the state. But you are responsible to do all the work before it's turned over to the justice. That is the last step. Questions, Charlie, anything?
No, nothing yet.
Okay, either you're all understanding this. I am so thankful. Okay, I'm moving down to the administrative expense page. Just for the fact I want to be on the page that I'm talking about. The review of the documents I have been doing and you have submitted indicate that some of the administrative expenses that are being charged against the RLF are not properly documented or aren't allowed. So it's a time to do another review of this area. Administrative expenses must be actual or direct charges. They must be documented with an invoice or a time log, and must directly relate to the RLF-ED. Overhead is not allowed. Employee payroll charges, like I said, must be documented in a schedule. This will be probably some new words for you. Expenses cannot supplement normal budget. The word supplement comes directly from the super circular for grants. What does it mean? Move on to slide 13. Supplement means you can't charge expenses to a federal fund, which this is RLF-ED funds, if you would normally pay for the expense with other funds. Some planting now is taking place in two main areas that I'm seeing. The first is overhead, the second is payroll expenses. Ask yourself, if we didn't have RLF funds, would we still have this expense? Rent? Yeah, you would still be paying rent on your building or mortgage. Electric? Yes, you would still be paying that. If the answer is yes, then it can't be expensed to the RLF. It has to go to your general fund. The same thing goes for payroll, especially in the supervising review area. The person who does the direct work can have their direct payroll charged. That's not a problem. If you're actually doing the follow-up, you're doing the actual work, filling out the forms, doing the contract work, all of that can be charged. But if you have somebody reviewing these forms to send them in, that's not a chargeable expense. This is something hard to get your head around. Your best source to help you on this, if you have any questions, first of all, you can call me, but your best source is your external auditors. Your external auditors definitely understand supplants versus supplements if they deal with any federal funds. If you have a school district, their Title I funds are very big on this, and so are the HUD funds. There is a section in HUD that says you can't supplant, and I'm starting to see that coming through. So we're going to take a second here to ask if you have any questions of supplants versus supplements. Okay. I'm hoping you guys can hear me, but I would think that you would be telling me if you can. Okay. On your next PowerPoint, slide 14, which I'm going to flip to because I want to show you a few things here. So just give me a second. And we will go down to slide 14. Actually, mine says it's slide 16, so, oh, I know why, because I added 2 extra slides here that you don't see.
We've got a question.
Somebody has a question.
Expenses would still have to come out of the 20%.
Yes, expenses would still have to come out of the 20%. There's no change in that. Okay, this is your example of a time documentation. You would have the name, in this case, Sue Smith. Okay, here's Sue Smith. Ooh, I know what I did. I'm sorry. The hourly rate for the benefit is $35.16, and then you would indicate the dates that they worked on the RLF. On 3/26, they worked for 2 hours because they attended the webinar. On 4/5, they worked 6 hours because they completed their report, but they weren't quite done, so on the 6th, they worked another 2 hours. On the 30th, they had to do their deposits. On the 15th, they reviewed and received their self-certification forms. And on the 30th, they had a follow-up with X, Y, and Z, or Z, Y, and X on loan repayment. So during this period, the person who directly worked on the RLF worked 13 hours, and the amount they charged was $457, and that's 13 times the 35.16. That's how time documentation should be documented. And of course, mine's nice and neat and typed out, but I accept, handwritten documentation. That's not a problem, as long as all this information is there. Okay. Another area that we have been seeing charged is training. If you're charging off, oh, I'm sorry, yes?
We've got a question here. I've been spending time on an audit of an old closed loan. Can I count and charge that time?
I would like to know what you mean by audit. And if you send me the question audit, I will tell you if you can or can't. But until you write that back, and we'll pick it up in the next question and answer period, let me go on to training. I guess not, because there's another one.
Can we charge for copies, postage, certificate, letter cost?
If it relates directly to the RLF-ED, if it's postage to send out letters for the RLF-ED, if it's collection costs, if it's filing fees, anything that directly relates to RLF-ED can be charged off, and that's no change. Okay. The next area is training. Training must be related to the RLF. If training benefits other programs, then the training expenses must be prorated to other grants or the general funds, even if these expenses are not allowable for the grant. So let's say you have another economic development grant from WEDAC, and you have us, CDBG, RLF, and you also do economic development out of your general funds. And if you go for training on how to market economic development loans, that would have to be spread across all three grants or all three funding. But let's say WEDAC doesn't accept it and won't allow that charge. Well, you can't then charge us 50% and you charge your ED 50%, your general funds 50%. You still can only charge us 33% because you have three different groups that do it. We get 1/3, and then your general funds would have to pick up the WEDAC portion of it. HUD or state-sponsored RLF training can be charged 100% to the RLF-ED. Documentation would be receipts for all charges, and if you're doing training, the agenda for the training, except for this RLF webinar. I have everybody who attends it on mine. I get all the records of who attends, so I do verify that. So with the RLF webinar, you don't have to worry about documentation. I have that already. But for if you would go to some other city and do it, or if you would come into Madison to do it, and it's not hosted by our office, you would have to have some kind of documentation. Like if you would go to HUD training, you would have to have the actual documentation for that. And I'm breaking for questions and answers.
Getting back to that audit question, Pam writes in that by audit, she means she was contacted by the state to finalize a loan and do a final closeout. They reviewed the files and asked for initial documentation and reports. She's guessing that this is technically it is a monitoring that must be completed before they can do a final closure on loan.
If it's an ED loan or an RLF loan, yes, you can charge it. If it's a project facilities or a housing loan, I'm sorry, not project facilities, public facilities or a housing loan, no, you can't charge it. But if it's an ED, economic development loan, or if it's an RLF loan, yes, you can. Okay? Anything else, Charlie?
No, that's it for now.
Okay. The other thing here is also you can charge expenses that are from a different reporting period. If you forgot to expense it one period and you can't expense it at a later time, I've been getting charges that are expensed from 1.5 years ago. Not really right. The only exception is when there is a timing problem. For example, if you use an economic development corporation to handle your RLF-ED, their charges from September will be invoiced and paid in October. That can go on your next report because it's a cash report, you're paying it. If also the same thing for payroll. If they worked in September but they're getting paid in October or you're getting charged in October, yeah, that's allowable. That's a timing problem. If there's one exception, you forgot a $20 charge, give me a call for special permission. But for the most part, don't go back 18 months and charge $15,000 off. And then send me all the documents for that time. You should be more up to date on this. Reporting to HUD is a yearly report for us, and so you need to report your expenses in the period you expense them. Okay, I think we're going to be done with administrative expenses unless somebody has a question. Okay, I am going to hopefully be able to go back to the Excel documents. And we're going to the reconciliation tab. Okay, your reconciliation tab, if you go down to line 32, and everybody should have the same lines, I believe, ending cash on hand per the bank account. This is the amount you enter here, and you must enter this amount. Some of you aren't. You must enter it from your bank account statements that you're sending in. If it's one statement, if it's two statements, that must be entered here. And therefore you balance. And it should be the amount on the statement, not the amount after you adjusted it for checks that weren't deposited or cash not credited by the bank. That goes in your reconciling item down here. Those are called reconciling items. Okay, next slide, 17. Line 17 here, where it says other, 18, 26, 27, and 28, that says other, will not be completed for the majority of the time. Matter of fact, I would say about 98% of the time, these lines should not be filled in. It is mainly to be used for payments on closed accounts. You close the account and they came in and gave you a payment, or if finally you closed the account because they went bankrupt and they finally sold the property and you got the money. You can put it in here. That's where it goes. But expenditures for filing fees, attorney fees, title fees should be entered on the administrative tab. All of that belongs on the administrative tab. Administrative expenses are administrative expenses and fees. So just for clarification on that. Okay. And if we go down on this sheet here, is the financial account reconciliation. Now remember when we were on the RLF tab? Here we go on the RLF tab. We started to put in the outstanding loan per supporting documents amounts. We did that because we're having problems people are having problems filling out this portion here. And the one cell you should be filling out and still should be filling out until we know this is all working is cell 58. This cell here should be the amount of outstanding, your record of the amount of outstanding loans. Once we know, I'm hoping by the next time I update this sheet, this will automatically be a formula and you won't have to worry about it. So until that point in time, right now you still have to fill in this dollar value. And again, the word others aren't basically filled in here. This is just a little bit, okay, maybe I have a $3 rounding error, so I'm going to put it in here. That's fine. We added another line here, add increase to balance due. It's an automatic. It's adding your accrued interest for penalties and interest that wasn't paid on defaulted or delinquent loans or bankruptcy. That automatically will come in here, so your outstanding loan balance goes up. And that should be all that's done on the reconciliation page. Oh, I do have one more thing to say about reconciliation. Some communities are only reconciling their books at the end of the year. As with all federal grants, this should be done at the end of the grant year also. So you're going to have to tell your bookkeeper that they have to reconcile their books, so their general ledger and everything else would be agreeing with this. I'm getting notes that says, well, our books won't agree because they don't enter the amounts in our books until the year end. No, everything should be entered in on a timely basis, definitely when you send the reports here. At the end of the year is required by federal regulations, so I shouldn't be asking you anything you shouldn't be doing right now. And this is happening a lot, not with the treasurers and everything, it's with the economic development coordinators who are doing this, that are getting the information from their financial people. Tell them ahead of time they have to be doing their reconciliation at every 6 months at the end of these periods. Okay, questions, Charlie?
No, nothing yet.
Okay, we're going to move on to the RLF performance tabs. Remember to fill these tabs in, and if you're not filling them in, you should be indicating on this sheet why. We still have some old ones that the requirements aren't in the contract, but anything that was entered into after September of 2014 should have performance requirements. You also, let me click on here, you also should be indicating, at least in row 28, you should be indicating if they had anybody hired in the current time period. And please note that I actually, instead of having the period end here, I changed this for the total time period, that for column 2 you would be entering from anybody hired from January of 2014 through September of 2014. Well, in this case, they didn't have anybody hired in any of these positions. Now, if you don't have anything from, they're saying they didn't hire anybody in this period, put a 0 in there, because that at least is telling me you're looking at this. I'm not sure if this is getting done or not, so if you don't put the 0 in, I'm going to have to send this back to you so you can tell me if you're collecting the information you're supposed to. Communicate a little bit here without doing the telephone or the email communication would be nice. The little zeros would definitely tell me that they didn't hire anybody. And you only have to put it in line 28. However, if they did hire somebody, you put 1 in. You put in 0 here if it's LMI or not. And then you would indicate their race, and I believe their race here is going to be American Indian for me. And their laborers. So we're going to have a laborer. And yes, they were given. Yes. And no, they weren't previously unemployed. So you would have to fill in that column.
Do you require the job data even if it is past the performance period?
Ron, you jumped ahead a little bit. Because that's my next thing here. If the performance period is ended, and I did really bad on this one for practice here, I'm going to do 6/30 of 2016 for that, for the end of the period. Okay, for this sample here, you would be filling in the 930 information, and that's the last time you would be filling in this information. Any of the other ones you would not be filling in, and you would not be collecting the information from the borrower. We have one or two that actually kept on collecting the information 10 years out. No, we won't be collecting that. The purpose of going down to somewhere between 1 and 5 years for performance is that we're not having to collect this information or report it. Okay, now this one's at the end of the performance period. Okay, so what I want to do at the end of the performance period is I want to get a listing of their employees from the borrower and figure out if you got the original one from them, that would be fine. You can compare the two. But if you didn't, figure out when they were hired. And if they were hired between, this one began in 2012, so the beginning of the contract in 2012, to 6/30 of 16, you would take how many people, you would get the employee self-certification forms for that. If they started with 10 people that they originally started with, and now they have 13 people, that means that they still hired and employed, and they're still employed 3 people, even though they hired 4 people here, according to the final count. So what you're going to have to do is you're going to have to figure out which one of those 4 people don't work for the company anymore. And you would adjust that in this period. So even though we hired one in this period, we also didn't have one in this period, so it would be a 0 because you would be doing a +1, -1. But this would be a -1 because one of the persons you lost were free and reduced. Folks were an LMI person. I'm going back to education by doing free and reduced. I'm sorry. And one of the people that were hired that left were an African American. So you would be doing the -1 here. And all of them were laborers that were hired by this company. So this would be a +1 for the person that was hired and a -1. So that would give us 0. But over here, all of the columns would say 3. And if I know where I am. So you would have 3 hired and 2 were LMI, and that would agree with the forms. And those would be the last 3 forms that would be documenting all your information. So when it's at the end of the period, you have to verify all the numbers that the people are still hired to their forms. Because you only can count the people hired and are still employed at the end of the period. Okay, any questions on the financial portion? Anything? Charlie, anything?
No.
Okay, we're going on to a new section, and I'm going to cover this a little bit more in depth than I have in the past. Regulations for the environmental review are from CFR 58, 24 CFR 58, and it's called Environmental Review Procedures for Entity Assuming HUD Environmental Responsibilities. They just can't say environmental review. They got to say it all. It's a big chunk, but it's 24 CFR 58. If you ever want to know anything else, put it down. We skipped we're on environmental review, Charlie. So if we have any past questions, we'll answer them at the end. Okay. The website for the PF Handbook, Chapter 4, you would hit Control, click on this website, or you would type it into your browser. And then you would page halfway down the page to get to the Public Facilities Handbook, Chapter 4. And that will be the same handbook chapter that we will be using for RLF-EDs. I don't think there'll be any changes between the two. So please feel free to use this for any additional information you may need. Okay. For all RLF-ED loans, some type of environmental review documents must be completed. And matter of fact, environmental reviews are unique for CDBGs in this aspect. If they're doing construction of a building or buying land, and you're only paying for the equipment, your environmental review is not just on CDBG funds, it's on the entire project. So even though you're not using CDBG funds for construction or for buying the real estate, you still must follow the rules for construction and real estate. Once you do your RLF, the environmental review information, you send it to Doug. He's our consultant here in Madison that we deal with. If you have questions, his phone number is here. He does not work full-time. He does get back to people. You can talk to Doug preferably, or you can call me. Doug knows so much more than I do in the subject area, and he's more than willing to help you. But you can try calling me if he's not available. But I probably will have to go to Doug anyhow with the answer. Okay. There are 4 different classifications of activities defined by HUD, by the regulation. The first one is exempt. Second one is categorically excluded projects not subject to 58.5. And then there's category excluded activities subject to 58.5. and activities requiring a full environmental review. Now, I just want to go over your exempt activities. If you're doing environmental or other studies, if it's in, and before we go on with this, I must remind you that these regulations cover all of CDBG, which includes housing, public facilities, community development, as well as economic development. So some of this stuff may seem weird that I'm going through. Well, we don't do RLS for that. Yeah, I understand that. However, this environmental review covers all those activities. So we'll keep on going for information and financial services. So if they're using it to do training, it would be an exempt activity. Administrative and management, public services that doesn't impact any physical change, inspections and testing of properties for hazard or defects, purchase of insurance, purchase of tools, engineering or designing costs, technical assistance or training, assistance for temporary or permanent improvements, payment of principal and interest on loans, which we don't do at all here at the state. And then they always throw in this thing, well, okay, even some of this may have to have an environmental review if it's getting paid for with other federal funds, and other federal funds require it. So, but for the most part, if you're doing any of this, and most of the time exempt activities, pure exempt activities, will not be done by RLF-ED. Now, Charlie, what was the question?
We've got two questions. First from Chris is, what of the loan funds are used to purchase an existing building?
We'll get to that.
Okay, question two is from Cynthia. Are environmental reviews necessary even if the loan is related to buildings?
Our RLF funds,
Are environmental reviews necessary even if the loan is related to buildings?
yes.
Okay, we've got one more from Jody. If we have issued an RLF fund for one of these exempt activities, we don't need to have an environmental review?
Okay. Any others?
There was one from back.
No, if it's finance, we're going to go back there
Okay.
later. Okay. If you have an exempt activity, the action you need to take is submit to Decker the following completed forms that are signed by the chief elected officer: your statement of activities and your determination of exemption. Now, these forms were attached to the email that you received either yesterday, and we'll be going through this at the end of the webinar, these forms. What you will receive back from Doug is a letter of concurrence saying that he concurs with your definition that this is an exempt activity. And I think I covered most of that. We'll be going on to the buildings and the real estate in a moment. The next area is categorically excluded projects. And a lot of the RLF loans go into this area. Economic development activities, including but not limited to, I always love these legalese that they use in the law to cover themselves, but equipment purchases, inventory financing, interest subsidies, operating expense, and similar costs not associated with construction or expansion of existing operations. And they're talking building expansion. Operating costs, including maintenance, security, utilities, furnishing, equipment, staff training and recruitment, and other costs. Those are the two main areas under this that are covered by this category: excluded project not subject to. The other areas deal with house rental and associated housing costs, and I didn't list them here because it doesn't apply to the RLF-ED. If you have a excluded project not subject, you must submit to Decker the following completed forms that are signed by the chief elected officer: statement of activities and determination of exemption. You will receive back a letter of concurrence from Decker, from Doug. Sounds exactly as an exempt, and it is exactly as an exempt. Whether it's exempt or categorically excluded, not subject, this is what comes back. What goes and what comes back. The next area are categorically excluded activities subject to 58.5. This is acquisition, including leases, of existing of land or existing structure. And that answers the question that you had before. Where does buying of an existing building fall under? This is subject to, and also it's also subject if you have to remove material and to make it ADA acceptable, handicapped or elderly acceptable. If you rehab buildings, if you change more than 20%, most of the time we're not doing that. Probably 98% of the time we're not doing that with our RLF. But in case you are doing with RLF, please be aware of this. And the remaining area deals with housing and housing costs in public facilities. So I didn't list them. Now, for these, you must submit to Decker the following forms: the statement activity, the statutory checklist, signed environmental record part 1, and a signed determination of exemption. And you will receive an environmental certification from Decker. Please be aware that when you do your statutory checklist, it's a 30-day time period that you have to do the statutory checklist on. Now, you received all 4 of these documents, but the statutory checklist, I just want to talk about a little bit. And the reason why buying buildings and buying land, you have to do the statutory checklist, is because HUD has specific rules about using federal funds on historical properties, flood management, and all the other areas. But mainly in these 2 areas where we're doing the RLF, it's historical properties, flood management, and the other one is solid waste and, oh, I can't even think of it, tanks underneath the ground are covered in this area here. And you want to know that before you buy the property, and that's why you have to do your statutory checklist. Now, our statutory checklist has all these different areas in, and you fill it out. Historical properties, because you're rehabbing existing buildings, is what I used for this. If it's less than 50 years old, or if the activity is listed on activities exempt from further review, and some of this stuff you're going to have to go into Chapter 4 to see. You're going to have to indicate if it's compliant, not actable, consultant review required, or conditions are mitigating. And you got to indicate the agents you're contacting and the agent's response received. When you contact the agency and the response received, you have to give them 30 days. If they answer you in less than 30 days, that's okay. Then you can go ahead. But you have to give them at least 30 days. If they don't answer you in 30 days, then you keep on going. But like I said, those are the main areas with the building, buying existing buildings. You especially don't want to buy a building that has some solid waste underneath. That's not allowed. I mean, you want to be aware of that because it could put that business completely out of business in a year, and you would lose all your money. So all the amount that hasn't been paid back yet. Questions here?
Well, we can jump back to the...
Nope.
Okay.
He keeps on wanting to jump back to that one financial question, and I keep on saying no. Okay. Activities requiring an environmental review. If you're building a new building or significantly enlarging your facilities over 20%, if anything isn't clearly defined as exempt or categorically excluded, or if they're already exempt or categorically excluded, but they're extraordinary circumstances. The whole point of this is if you even question if a full thing, environmental review, or what classification yours falls under, give Doug a call. He can answer that immediately for you. So please call him. I can try, but like I said, I probably will go to Doug on it. And this is what you need to send in for environmental review, and I would say 99.9%, and I'm just giving you the little 0.1 just in case it does happen, will not require a full environmental assessment review. But you will receive an environmental certificate from Decker back. Mainly you will fall under the first 2 categories unless you're buying land or buying an existing building. Then you'll fall under the third category, but mainly it's for the first two. And remember, the environmental assessment must cover the entire project, including related activities not funded by CDBG. Okay, any questions on environmental review?
Yeah, I got a question from Cinda and Pam. Pam says, I apologize if I missed this, but does every outstanding loan need this environmental review paperwork or just new projects?
Oh, this is very, very interesting. All your loans should have an environmental review done, should have had an environmental review done. However, I will be the first to admit, before we took it over, you probably weren't even aware it had to be done.
Angie has a question. She asks, environmental review has to be submitted prior to loan approval to Doug?
Yes. In case anybody didn't hear that, and I know Charlie's voice is carrying, I wanted to repeat it. Your environmental review must be done before you can approve the loan. Okay.
Got one last straggler.
As long as it's not financial, I'm fine.
Okay, so Christian asks, how long does it take to turn an exempt project around to get the return certificate of concurrence? We submitted one for a piece of equipment on August 22nd and are still waiting for the certificate.
You should have had it already. Christian, give me a call. Send me the information, and I'll find out why Doug hasn't done anything yet.
If we have a phase 1 completed, how does that factor into the review?
I have no idea what you're talking about with the phase 1. Give me a little bit more information on that one. I can guess what you mean by phase 1, but everybody uses phase 1 as a different definition. Just got a new one.
So you're saying that it is too late to do an environmental review on existing loans? We only need to do them for new projects.
I didn't say that. And I'm going to be wishy-washy on here. I would say that if you did a loan since 2014, you should be doing your environmental review, because I will be monitoring those loans. And if they don't have an environmental review, I will be telling you that you need to have it.
We got some more info on this phase 1. It's an environmental review that gives a history of environmental factors that occurred on the property. And they're wondering if they have that completed, how does that factor into the review?
I'm not understanding. Whoever is doing this one, you have to give me a call, because I'm not understanding where you're coming from. And I apologize for that, because I really...
Okay. If we have determined that it is exempt per statute, but are waiting on the certificate of concurrence, do we technically have to wait for the certificate before we can approve close? Or can we proceed and allow the certificate to catch up?
The official word on that is you need the certificate. But if you're sure it's a level 1 or level 2, that it's exempt or exempt, not subject to, and you're sure of that, you probably can go ahead.
Okay, moving along, another question. We have environmental review, but it was not submitted to Doug prior to loan approval. Should we send it now?
Yeah. Oh, by the way, when I said that, you have to have sent it into Doug before you go ahead with it. So you have had to do some phase of the environmental review. Okay, the supporting documentation that you received with it, I just want to briefly go over it. One of the things that we never did before is we never gave you a copy of 24 CFR. And I'm saying that 24 CFR 58, when I'm saying we never gave it to you, we didn't give it to you for public facilities either. We have now attached this document to the end of Chapter 4. We always used to say, well, you can go find it if it's exempt or whatever, the definitions in 2458. And my thing was, why aren't we just telling them or giving them the document so they don't have to look for it? So here's the document, but it's also attached to Chapter 4 on the internet. The next thing, oh, I'm going to skip that one and come back to the agency. Statement of activities. This is one of the first two things you have to fill out. This is the statement activity you have to fill out for every single RLF loan. And the first page was the actual statement. The second page is a sample of how to fill it out. So that's for use for your record, so you can go in and fill it out. These are all in Word, so you can do your own typing here. Statement of activity, determination of exemption. That's the second item you have to fill in. You fill in the project name, and it's RLFED, Brown County / Yacht City. So you're giving that the RLFED, you're giving who the UGLUG is, and you're giving who the borrower is. Complete project description, and it's from all funding sources. So this is capital, to give money to just for capital or for just for equipment. That's all you're doing. You're giving money so they can buy equipment. And then you would indicate that it's categorically excluded or exempt. And for equipment, I believe it's categorically excluded. That tells you that I don't know this backwards and forwards, that I don't know exactly where everything falls under. But you would date this, and you would have your chief elected officer sign it and send it on in, those two documents for the first and second level. Your statutory checklist is here. So this is your copy of the statutory checklist that if you're buying a building or you're buying land that you have to fill in. And like I said, there's more definition on how to do this in Chapter 4 and more instructions than what I'm giving you today that you would have to go in for the statutory checklist. But one of the things that you should also have received is the agency contact. So you have to contact these agencies to see if the real estate you bought is a historic property. So you would contact this agency. And it tells you to contact the environmental desk, which is Doug. If you would be contacting the floodplain management, and this is where you would be sending out your letter. And Chapter 4 has copies of the letters you would be sending out to all these people. But they also would be telling you who to send it out to and what would be sending out to. We just put this list together and we just updated it with all the proper addresses and everything else. Some you're not sending letters out, you're just looking at the internet to see if this area falls under it. But again, I'm going to tell you, go to Chapter 4 and read this if you're doing a buying of real estate or buying of a building, or if you're the .1 that's actually building. So it's all here. and I gave it to you, but it is attachments to Chapter 4 of the Public Facilities Manual.
What exactly do you want in the project name line?
What I want in the project name line is you put that as the RLF, because then Doug knows that this information has to come back to me. Otherwise, it's going through this whole system here, and I may never get it back in any kind of timely manner. I want it to be put down for the county or the city that's sending it in, so Doug knows who to send it back to, and I know where to file it with. And I want the name of the borrower put in there so I know where it all is attached. But it's not only me that knows all of this, it's also when you get it back, you know that who it correlates to. So it's just those three things: RLF, name of the community, and the name of the borrower. Okay. We're basically at the end of the PowerPoint. I know there's one financial question that they had that I will still answer. But if you have anything else, send it on in, whether it's anything I covered or not. Remember, these forms are due on November 15th. There's about 4 people that did not get their compliance report with the email that came out this week, and that's because I have a few last questions. I must admit this year, this 6 months, I'm a little behind. I will have you your compliance report by 9/31. So, which is the financial one?
Someone was wondering, why does my report not have the highlighted areas? It's all just white and plain.
Oh, that's good. I had some formatting problems because of the level of Excel I'm using versus the level of Excel you're losing. I lost the formatting on some, and I had to redo them. Now, either I didn't redo yours, or we're going to have the problem. So whoever is sending this in, send it to, give me an email, and I'll look it up to see what I can do for you. I don't know how to handle it otherwise. Yes, this is the first time I lost 5 formatting, so I'm sorry.
When do we get notification of acceptance of the RLF report?
You don't. Because I'm still reviewing the 331 reports as of this moment. If you want to ensure that I got it, send it with a receipt request in the email, and I will indicate that it was received. But I review every single report that I receive and all the documentation. And it takes me all 6 months, and like I said, this time it's still taking me a little bit on 331. And I'll tell you why. It's because we had a lot more problems this time reviewing. I don't know what happened, but we had a lot more problems, and a lot more emails came back out to you guys to follow up. Somebody asked the question. I only have one line for the question, so I can't see them. That's why Charlie gives them to me. But I did see one that has Section 3 reporting with a question mark. As of right now, Section 3 is not being reported. If you are going to be required to report Section 3, you will receive an email in January from me.
Are performance date and target date the same thing for new and retained employees?
Okay, I'm going to say this again. You either have new employees or you have retained employees. You don't have new employees that are being retained, that are being maintained. The target date, I have no idea what you're saying for the target date. If you're talking between the 1 and 5 years, yes, that you only can test the period that they have to be hired within 1 year up to 5 years, or they have to be retained between 1 year and 5 years. Remember, retention is only when a business is going out of business and you gave them money to stay in business.
Should we assume, if we don't hear from you, that our report was correct and acceptable?
Yes. But that doesn't mean getting rid of the documents because, like I said, I'm still reviewing the 331 report. For four of them, I still have left to finish reviewing because there's questions. Now, there's some that I've sent emails out and I never received any response from the people. I put down what you put on, so you may still have problems balancing, and a lot of it is dealing with the outstanding loan balances not agreeing between your documentation and our report. So you may have to follow it up this time because you never responded to me on the last question. Also, if the documents aren't coming in, you're going to be chief for a monitoring coming up. It's going to be one of the highlights of being monitored if I don't receive all the documents in. It's not the only criteria I use, but it's going to be, it is one of the main reasons you are getting monitored. Okay, we are done. So if you have no more questions, you can sign off. We sit around for about 15 minutes waiting for new questions. So if you have any new questions, put it on through. Otherwise, give me a call. And it's do what on missing documents?
Do you notify us if we are missing documents?
Oh, yeah. Oh, yeah. No problem there. What does Christian want?
She's just saying thanks.
No, that's him. Christian is I only get a line and a half of these questions.
I think we're caught up.
Okay, like I said, we'll be sitting around for a few more minutes. If you have a question, give me a call on my phone or email Decker and I'll call you back or something.
Muted.